All right. All right. So drawing reverse trend lines is something that is we can use from the standpoint of um, we can use from the standpoint of instead of using a point and figure chart, we can use that as our as more of a um, objective of where the market can go to. Okay, so we like to draw them when a market basically has like absorption or reverse absorption, trying to draw them as a vertical aspect. In other words, if a market's marking up, we like to use them. So you can see that. So you can see this chart, correct? Okay. So
Yeah.
for example, we want to draw them for again. We want to draw everything. We want our lines to make a story. Okay. We want our lines to make a story. And anytime that lines make a story, we utilize that. So when I have markup like this, the market the extend markup phase, there has to be a point to where the market gets to be overbought, or when the market just goes too fast, too far, and it just gets overbought position wise. Okay. So for example, here, and I do this actually in the newsletter. You take this reactionary high, you draw that cross like that, and that creates an overbought condition. So you want 2 points to give you a third point, like any chart. Okay. When I get a market that's in a markdown phase, like this bar, okay, I want to draw them at a 45-degree angle. I'll take this line, I'll draw like a 45-degree angle, and boom, and that gives you the low. Okay, these lines are not designed to be perfect. They're designed to give you an area of overbought, oversold areas. Okay, so if you take those lines across and you look at the subsequent horizontal support or resistance, in this case support, you draw the line across like that, and that forms what? A perfect axis line. Okay, I can't,
Okay.
I can't, I can't, I can't, I can't illustrate to you how important that is because what happens is, what happens is that, um, uh, what happens is this, is that what happens is that you want to draw them in lines, you want to draw them lines that are significant. So here, for example, I don't have an overbought, oversold line because I have nothing here, right? The only lines I have is my horizontal line from a vertical selling bar. That's all I have, okay? Remember I mentioned earlier about this being absorption? Usually absorption takes closer to resistance, but this is absorption. So when you say, well, 92 is resistance area, that cause is well above 92. So even though 92 may slow it down, 92 is just going to be like a speed bump in the market if you have cause built there. Okay? So I use reverse trend line be something like this market. Your market's going up vertically like this. You draw your lines like this. And you take your and you want to connect as many as you possibly can. So this is probably the right line because look how it connects. One, and it connects like three or four lines there. So where the market reacts the greatest from is where you want to draw your lines from, just like your horizontal lines. Horizontal lines by themselves mean nothing unless they're really parallel channels. I mean, you want, parallel channels mean nothing. Like this really doesn't mean a lot. We like to pair it up with something like this, right? Like something like a parallel channel. But you can use the reverse trend lines as something, but you want to use these trend lines as support necessarily. Because those trend lines don't mean anything. Because those trend lines, as they go extended, you could break a trend line with no support, with no resistance, with no volume. That doesn't mean nothing to a wyckoff trader. Okay. So anytime you get a vertical move up, you want to be able to take the lines. You want to be able to draw your reverse trend lines and they connect. Look what that gives you. So the more lines that you connect, or the larger lines that you connect, the larger extension of lines that you can connect, it makes it to a point in which you want to draw those particular lines. We like to draw lines that are parallel channel to each other, but we don't want to draw a trend line by itself, but we can draw a reverse trend line by itself. Okay? The NASDAQ is probably the bigger example, and I show this all in the newsletter. The NASDAQ, for example, again, has that vertical, in fact, who wrote that down there, okay? Has that vertical behavior. That's the high of the NASDAQ. Take this reaction high. Let me pull this down over here. You connect those highs. Look what happens. This is a reactionary high. This is a reactionary high. And look what happens. Now, we don't treat them as breakouts. If you get above the reverse trend line, for example, let's suppose the market does this. Okay, for example, you're drawing, and it goes this. This is not a breakout. That just means the market's more overbought. Does that make sense? So we want to draw them from the greater reaction areas.
Yeah.
And we want to draw them for cluster areas. And that's what's really important.
So you're doing most of this in the daily. Do you do this on different time frames, or do you do this just on the larger?
If I tell you, I have to kill you. I do it on every single time frame.
Okay.
Because you can be overbought on an hourly chart. I mean, nothing on a daily chart. But if you're trading an hourly chart, you don't care about the other, right? So this is the hourly chart, for example. Okay, I take my reactionary high, and I want to keep it at a 45-degree angle. So I take about a 40-degree angle. Boom, boom, boom. Pretty good, huh?
Yeah.
Now you're saying to me, Gary, why did you draw this line here? Okay. The answer is, it's in hindsight, right? Of course it is. I see this chart. But let me show you where you draw where they're not in hindsight. I have that action, don't I? I want my line to be about 45-degree angle. Okay? So I look for an area that could draw these lines. Well, this is a reactionary high, is it not? We go down from there, but it's a high move before it goes down. Take it, move across. That doesn't show me much, does it? Not a big deal. Okay? So I draw my lines. Let's take that one. Okay? That's about a 45-degree angle. Either one of those are. And I'll extend it. Okay? So I know that until it gets to that line, I am not overbought. That is my target. So when I do charts, I will give you a target. Just like in the bond chart, I gave a target. Roll the tape. Okay? It did not get there, right? Now, so I'm always drawing things that incorporate the market. So it didn't get there on the hourly chart. But on the daily chart, if I take it, okay, but on the daily chart, so not all the time it's going to work on the same chart, right? But I'm always looking for that aspect. Well, the market's vertically up. I'll take a reaction high, and I'll connect it to a reaction high. So let's suppose my market's like this. Okay, I know that the market's overbought in this area. It's not a breakout. Now, even though that I'm not not that I'm out here, for example. I would be out, let's say, well, I probably would maybe sell it anywhere here, right? Because I'd probably hold on to the chart because of that bar, right? So let's say I get out, let's say I get scared and I get out right here. Okay? Let's suppose I'd be here, I'll try to play for a couple of days and I wait for a reversal. That's fine, right? That's fine. Now, that's a reverse trend that wasn't perfect, but if you were buying this, you were buying overbought.
Yeah.
Right?
Yeah.
Okay. So my point is this. My point is I draw that line not for perfection, but to give me a case for the area as far as that goes.
Okay.
Does that make sense?
Yeah.
Okay. So my point is that how does the market react if you want to go to a 45 angle, even if it doesn't work? Even if it doesn't work, but you want to join them and see what happens. Now, same thing is reversed. If the market starts to go down, you want to draw them at a 45-degree angle. So you take two charts and just at a 45-degree angle and look. That's a 45-degree angle. It doesn't get there. Okay? That doesn't mean that it's still not, to a point where it's close to being oversold, but that's how you draw that line. Now these lines get adjusted all the time. Okay, these lines get adjusted all the time. So you draw two lines at about 45-degree angle and make a third one the same way. If it works, you're a hero. If it doesn't work, it probably gives you the area that you should be going out. Point the figure chart, will give you an area, a point, a number, but that's not an exact science. Oh, point figure take you 94. Oh, the market went to 98. But you get out of 94 because that's your count. Or you get out here because that's your count. But guess what? If you get out here, for example, you save all the time here. So you're getting out overbought. The line may not be the best, but you're getting out to a point where the market's more vulnerable to the upside than downside. Here, you're giving up this. Look what you're saving. So it's a good guide, reference-wise. Yeah. It's a good guide. So anytime you get a 40, so let's take a 50-minute chart. Let's take a 50-minute Aztec. Okay, just take one that's that's kind of arbitrary. Okay, you take these reactionary highs, but you don't get a 40-minute angle, right? You don't really get there. Let's take 4 hours maybe get more play. I don't know. But you take your 40-minute angles and you see what would happen. And you're just playing around lines. If they fit, use it more precisely. If they don't fit, it's a guide to where it's at. That's all. They're all guides. They're all guides.
Okay.
and that's how you have to, and that's how you look at it.
Makes sense.
So, so So that's how you judge that atmosphere for that close. So that's why. So we use them as guides. It's very important.
Yeah, makes sense.
It's really, really important, right? You know. Mm. So that is how you would draw those reverse trend lines to the market.